In this video, we're going to be going over 3 very high quality dividend growth stocks in my opinion, and these are my favorite kind of stocks to hold long term. The stocks that have a low dividend yield, and because of that, they have a very low payout ratio and a very high dividend growth rate. So some of these stocks are growing their dividend yields by 20% every single year. So these are the kind of stocks that you want to hold for 5+ years, because in 5 years, your yield on cost will be insane, and most likely they will have doubled their dividend. So check this out. The first stock we're going to go over is ticker symbol MSCI. Now the yield, I hear you, is only 1.13%. And if we go to their actual dividend history, they just rose the dividend from $1.38 to $1.60. And pre-pandemic, if we go to 2020, their dividend was less than $1. It was 78 cents. And now it's $1.60. So they've more than doubled their dividend in just 3 years. So maybe every 3 years they're going to double their dividend. I don't really know, but let's actually dig into their financials. Like, look at this. The EPS is up 89% year over year. This net income is crazy. And we can look at their free cash flow per share, which includes stock-based compensation. And on a bad quarter, they made $3.29. And their dividend cost $1.60, so they can easily afford the dividend. And that's just cash flow per share. They can also easily afford it just from net income, which you don't even want to look at for a dividend payout. But yeah, here's their actual cash flows. As we can see, it hit an all-time high in the most recent quarter, up 23% year over year. And I also wanted to show you the total common shares outstanding. Yeah, it's down 1.09%. So all that growth has been organic. They haven't issued shares and they haven't issued debt, right? So yeah, they've kept the same amount of debt from 1 year ago, 4.51 billion. But let me also show you how much the dividend cost of $109 million. So check that out, $109 million. And let's see, when could they not afford this? They have never been able to. Okay, 2019 Q1, they made under 100 million. But look, ever since then, there's never been a quarter where they've even come close to not being able to afford the dividend. So that's why I said they have a very low payout ratio, and that's assuming they don't grow revenues even more. They're expected to grow a bunch. I mean, just look at how the stock has done. Quite good. So yeah, that's the first stock, ticker symbol MSCI. Also, don't forget to drop a like on the video. It really does help me out a lot. I always forget to mention that. But yeah, let's get into the next dividend growth stock. All right, guys, the next dividend stock is ticker symbol EG, and I promise you will be impressed by the stock's financials. So check this out. This one is actually an insurance stock, but the yield right now is 1.89%, so almost 2%. And I'm going to show you why they are able to 10x their dividend if they wanted to. You guys ready for this? So look at this. Here is their cash flow per share of $23. And that's down 10%, and their dividend only cost $1.75 of that. And let's actually go to net income per share. So even on a net income per share basis, they can so afford this dividend. It's crazy. So let's look at their cash flows down here of $1 billion. All right, let's just say $1 billion they make every quarter. Their dividend literally cost $96 million. And if we go to their total common shares outstanding, you have been diluted 11% year over year, but the amount of shares have stayed flat since. And the reason it went up is because they did an acquisition. But anyway, and for these insurance stocks, you really want to look at two numbers, which I'll quickly look at, is the total premiums earned. That's up 17% year over year, and the net investment incomes. So insurance stocks are a little unique because they get to have like their own little portfolio, you could call it. But anyway, that's what I wanted to show you about EG. Like I said, they have the opportunity to dramatically raise their dividend if they wanted to. And yeah, that's why I put it on the list. All right, guys, the last dividend stock is my favorite one on the list, and probably because I own it. And I have no problem buying this one at all-time highs because that's what I did basically. Average cost of $322. But basically, they're trading at a free cash flow yield of well over 5%. And their dividend yield is 0.94%. So what that means is they're able to 5x their dividend before it becomes a problem. And I also have a few things I want to share with you from the stock's website. We'll do a quick introduction to them first. So this was the full year 2023 data. They made adjusted EPS of $15. And here's another some other fun facts, like 25% ROIC. But here's what their plan is for 2030. So this company, Vision 2030, they expect to make $40 of EPS. So right now they make 15. they expect to go to $40. And here are other few things. They want 25% ROIC. They're almost already at that. But anyway, if they actually do this, let's say they do it by 2035. But anyway, let's say they actually accomplish this and make $40 of EPS. If we give the stock a PE ratio of 20, that means the stock price should be $800. And right now it's $340. But anyway, let's actually go dig into the financials and the real numbers because that's all that matters. All right, guys, so check this out. Here are their dividend stats. So they have a yield of 0.98%, but look at this growth. It's right now 85 cents. And if we go to their cash flow per share, it's, always above 85 cents. The only time it hasn't been was this one quarter when it exactly was 85 cents. But this company, by the way, is almost a dividend king. They have 48 years of dividend growth. So yeah, literally in 2015, 26 or 2019, this was 40 cents. Now it's 85 cents. So they doubled that since then. So here is the balance sheet, and I'm going to show you later why this is actually amazing. You see how their assets are 6.62? This should be a lot more because they just bought back a bunch of stock with a bunch of cash, $600 million plus worth. So I'll show you that in a second. But look at their free cash flow right here. And I want you to notice a bad quarter of $149 million. It was $149 million. And their dividend, the only 1% dividend right now, literally only cost $41 million. And check this out. It's down from the last quarter. It did cost them $42 million. Now it costed $41. Why? Because they spent so much money on stock buybacks. $300 million in this quarter, $300 million the last quarter. And because they did that, their total common shares outstanding are down 6.29% year over year. So you've gotten the 1% dividend and the 6% non-cash dividend through stock buybacks, which when the company does both, I absolutely love. And if we go to their total debt, check this out. It's down 11% year over year. They're just paying off all their debt and stocking up on cash right now. So after paying off the debt, the stock buybacks, and the dividends, they still have $576 million in cash, which just shows how well they're doing. But yeah, guys, if you like these three stocks, you're going to absolutely love my stock portfolio update where I go over ticker symbol POWL and ticker symbol AFG, where they have also absolutely insanely low payout ratios and a lot of room to grow the dividend. But yeah, don't forget to drop a like on the video. It really does help me out a lot. And if you click on the video up here, you'll also get to see every single stock I hold in my MooMoo portfolio. Unlike no other YouTubers, I feel like I'm completely transparent. I show you my total return from every stock. But anyway, hope you guys have a great rest of your day. My name is Nathan Robert.